Howdy guys, Matthew McGlay here. Today we're going to be covering what are trends, trend lines, and how to use support and resistance to become a more successful trader and increase your probability of making money in the market. Alright, welcome guys. Today we're going to be looking at a chart of the S&P 500, which is simply an index that measures the performance of the top 500 companies in the stock market. What you're going to be noticing here is we're looking at the chart here, and it might kind of look like to you at first like noise, random up and downs and chaos, and it looks like you're kind of just throwing your dice into the market, and how do you make sense out of this? So what we're going to do is we're going to first start analyzing a very important concept known as trends. Some of you might have even heard of the concept, the trend is your friend. And what this is indicating is that the market tends to move in with momentum in certain directions. So let's analyze right here. We can see it here back at the beginning, April 24th, 2017. We notice a huge rise here from here to here, all the way to January, February 18. That's almost an entire year that the market moved in one direction. So it had a trend, you can say. And then we'll notice here there was a sharp drop down, but then from February all the way up to September 18th, almost another full year, the market moved in one direction. So we can consider these uptrends. We notice these massive uptrends. And then down here, there was a downward movement from December to December 18. So from September to December, this wasn't too long, but it was still a trend. And then we'll see here, we can keep on going, analyzing these trends. We start seeing the movement of the market. It's going in a general direction. So ideally, the goal is you're seeing is rather than trying to take advantage of these small little ups and downs, which some traders can, you definitely can understand these and recognize these and cut profits on these. The goal is to analyze what is the trend. Try to catch this move in the market. Try to see how it's going. So even if we look here, even in a greater sense, we're noticing these little mini trends. Look what we noticed going on right here. There's one big, long uptrend that the market has been going along, a general motion or movement that the direction of the market has been going on. So we can label this a very strong uptrend. And continuing on, we can kind of analyze here and we see what happens. We just had this recent huge move that happened due to the coronavirus and the stock or the oil price manipulation of Saudi Arabia and Russia, a massive downward movement. We can consider this maybe a potential break in the trend. Only time can tell, but these are movements that we see in the trend. So this is kind of covering the aspect of what are trend lines, right? So we've analyzed the trend and we see the trend lines now that we've been drawing. We want to be aligning ourselves with trend lines. We see what the trend line is doing and we want to make sure that we're going with the river. It's the entire concept of don't paddle against the stream. You're going to tire yourself out and you're going to get exhausted. Paddle with the current. Pretty cool, right? We're starting to see order out of chaos in the market. We notice these very large trends that we've seen, and then maybe even little micro trends in here. And this is one of the concepts that you'll start analyzing within the market, is that there's no set in stone answer. There's only things that increase probability or decrease probability. For example, the probability of a very strong trend continuing in that direction is increased due to the strength and the longevity of the trend. But when analyzing smaller trends, for example, we can even say this is a micro trend that excelled up in a very high direction. The continuation of that trend has a lower probability due to the time frame. So think about it in the sense that the longer something's been happening, the more likely it's going to keep happening. We have a pretty good belief that the sun is going to rise tomorrow because of the trend of it rising every single day for as long as we can remember, right? But at some point, maybe a couple billion years or who knows how long down the road, there's a chance that the sun might not rise. Who knows, right? All right, so that brings us to our next thing is we see that the market kind of fluctuates in these ups and downs. We've been able to identify a solid trend, a direction the market's going, a general uptrend that we've noticed that's occurring within the stock market. But for some reason, we see these kind of fluctuations, these ups and downs. It's not just a straight line. And if you pay close attention, you're going to start noticing that these areas tend to all peak at a certain point, at them or near them. We can get closer. We kind of look like right around here. See some other potential areas right here. And what these are known as is support and resistance. And whether it's identified as support or resistance depends on where the price currently is. So for example, if we look down here in this region, way back, in 2014 to the 2016 era, even a little part 2017, we'll start seeing that price keeps fluctuating. It goes up and down, but every time it gets right around this 2100 mark, it kind of bounces back around and refuses to go up, and then it goes down, and then it comes back up and hits this area. So this is kind of known as a resistance. The market is having resistance to going higher than this. Every time the price goes here, the bulls go, whoa, 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 slow down. And then they come back down and test it again, go back up. Oh no, whoa, 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 slow down, come back down. And then they finally break that price. And look what happens. We'll zoom in on here a little bit. We zoom in on this area. Price kind of goes past it, comes down, and then it starts fluctuating here. And it tries to go back down again and goes, nope. And then look what happens once we break this major resistance. Price goes whoo through the ceiling. So now this point right here, which was once a previous resistance, is now becoming a support. Price didn't want to fluctuate it. Once it broke it, it started bouncing off it, and almost like a trampoline. Once it bounced off it, it went flying up and just started going up, 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 up. Everybody in the market we just broke this point that we've been trying to break for almost 3+ years, if not longer. And once we broke it, the market confidence went very high. And we started noticing how the market came very high up, and then it peaked right here. And once it peaked, that created another new resistance that the market wanted to break. Market came down and it set its level of support. It set its level of support in this region, and you'll notice how the market keeps bouncing off of this area. So now it's in this limbo again. The market rallied very high and it's trying to decide. This is almost like a negotiation, a back and forth of what the mind is thinking. The composite man, you could say, of the market is deciding, hey, should price go up higher? Is price too high? Is it what? It bounces off the support, goes back up, and it retests this resistance here. It tries testing it again, and then look what happens. It fails the test. Market price goes way down, hits this support again, bounces up, and then it keeps going down. And at this point, the market goes, oh, we just broke this support? Oh, no, price is way too low. And it bounces back up, almost like a trampoline again. Bounces up off this support, skyrockets back up, all the way up until this point here. And then you can see this once now resistance. Once it gets broken, the market comes back and retests it, keeps bouncing. And then once it finally determines that this is a solid support, it launches up. So these are the general concepts of support and resistance that you can use throughout your trading. You'll notice that there's even little mini micro supports and resistances that are developed, and they're usually just indicated by the swings. For example, we can see kind of a swing there. Another swing here. These are little tiny areas of support and resistance that occur throughout the entire thing. It's like the concept going back to the trend. There's large trends, there's small trends, and there's very powerful supports and resistances and weak support and resistances. And these are usually indicated by where the market touch base is at. Wherever the market has a very pivotal point, there's certain indications of strong support and resistance. For example, if we look back over here, this area that it took a lot of time to break through, took several years to break through, this is a very strong support. And you can see that just recently when the market came all the way down, it got kind of near it, but it's like, no, that's a strong support. We know that's not going to break. It's going to go through here. But these other smaller supports here, you can see where the market kind of bounces through in these regions, these areas that I just drew here. You can see how the market is kind of fluctuating within these areas and testing these areas. That's the entire concept of the market. You got to keep in mind that it's people going, okay, where's safe, where's not safe, where's safe, where's not safe. And they're going to be bouncing through it. And your goal is to understand this hive psychology, the mentality of the mind, what it's thinking, what it's doing, and where it's making its decisions at. If you can implement this into your trading, you can increase your understanding of the market and your chances of being a successful trader exponentially. This is a huge point. So I recommend you go and do your own graph, look at a couple of things, and try to draw your own supports and resistances and see how it works. Maybe go back, 20 or 10 plus years or something, or you don't need to go that far back, just whatever. Go back a couple times, draw a couple support and resistances, and see how the market behaves and how it interacts with those ones that you've drawn. Hey guys, I hope you had fun and enjoyed the video. If you found it of value, help me out by hitting that like and subscribe button for future content. If you want to follow me on my other social media sites, check me out on Twitter and at Instagram, @MattMcGlay, link in the description.